Good morning. Welcome to Market Day Report, another trading week, and we'll get it started with a bang. At 11 o'clock Central Time, World Ag Supply Demand Estimates Report, also known as the WASDE. This one's big because it's the first estimate of production that's based on surveys of farmers and their fields. 11 a.m. Central Time, a big report. Brian Hoop's coming up in just a moment. We'll talk about that. First, let's look at overnight trade of corn. As we have seen a lower trade ahead of this USDA report. Old crop 375 and a quarter, penny and a half lower, penny and a quarter lower on the December, trading 393 and three quarters. Also an overnight trade, pressure in the beans. Old crop off 6 and a quarter, 982 and a half. New crop still below 10 bucks, 997 and a quarter. It's off 5 and a quarter cents. Let's roll through the wheat market as well, starting with Chicago. Remember on Friday we closed out a bit higher. Finally got a positive close on wheat. September 8 and three quarters lower, 533 and three quarters. December 557 and three quarters, down 8. For hard red winter wheat, off 9 and three quarter cents on the 24 contracts, with D's at 560 and three quarters. And spring wheat Minneapolis down 7 and a quarter on the December, 601 and a quarter. Cotton market after a higher trade on Friday, building on that and overnight. December 68.67, up 33. Okay, let's look at where we're starting the week and bring back in Brian Hoops. Brian's with Midwest Market Solutions. And Brian, still a few hours before fireworks.
Yes, sir. We're seeing lower prices overnight going into this report, with corn, soybeans, and wheat, and corn and beans making some fresh lows for the move in here. So, we're going to see increased volatility, I think, because of the FSA data that's incorporated into these numbers. Right now, the trade is anticipating a little bit bearishness in both corn and soybeans, as well as the wheat market, from the standpoint that we're expected to increase yield potential here in corn and beans. And whether we get all that factored into the markets today, or the USDA throws us a few surprises and it's not quite as bearish as what we fear, the bottom line here is the weather looks very good. The crop size is probably going to get bigger in the next report next month, and traders are looking to sell rallies if they happen to have one after today's report. If it's somewhat of a neutral report, or not as bearish as what is feared, if we get some sort of a technical rally, you can bet there's going to be a lot of selling waiting there, trying to either hedge last year's crop, this next year's crop, or just speculators coming in and selling this market, anticipating lower prices by harvest.
Okay, lowest corn price in 4 years. Weak demand, strong supply. Have we found a bottom yet?
That's a great question, and that's a question that people ask us almost every day. And the answer is, I don't think you can say we put in anywhere close to a bottom. You have, the job of the market right now is to find a price level that'll stimulate demand to chew through these supplies. We're going to end up with the largest corn supply in history, over 17 billion bushels. It's the second largest soybean supply in history. That means we've got to find a price level that's going to stimulate demand and chew through these big supplies, or we have to have issues in South America or other countries that'll give us supply issues that we can take advantage of. Right now, soybean demand, Chinese demand is the slowest in 19 years for U.S. soybean products. So it's not a great demand scenario. We had some private export sale announcements this morning, and that's pretty routine for this time of year. Typically, we get export sale announcements from now all the way in through September into early October, as these end users book their supply needs and get the crop priced. And in case things go lower, they can cancel those purchases later. But certainly they have to do some booking, but it's not an indication that we've found a bottom yet.
We're trading, soybeans near 4-year lows already. So, yeah, we've got a mountain ahead of us as far as producers are concerned. How about we come back and talk livestock futures in just a moment? As we had a rally on Friday, can we maintain it this week? More as Market Day Report continues after this. Good morning. It's Market Day Report on a Monday. And again, we've already mentioned it. World Ag Supply Demand Estimate Report coming out at 11 a.m. Central Time this morning. We'll break that down for you after it hits from USDA. Also, a little later this morning, we'll reopen livestock markets. This is how they've settled on Friday. And we did see a rally in live cattle. The August contract, 184 and a quarter, up 220. October most active at 181.15, settled $3.12 higher on the session. For the feeders, up 412 on August, 246.50, and the September at 241.60, up $4.17 a hundredweight. And a slight rally in hogs, and more than a rally, maybe just a slight move higher, as October settled 73.97, up 35. I want to throw one more market in there as we get ready to bring back in Brian Hoops with Midwest Market Solutions. Crude oil continues its rally in morning trade, with September trading 77.97. That's up 113. So I've thrown in quite a bit there for Brian as we bring him back in. So we've got livestock futures, a little bit of a rally on Friday, and we see crude oil rallying on Friday. Can we tie those two together in any form or fashion?
Well, I think to a small extent we can. Typically your crude oil markets affect soybean oil, corn more than what the livestock does. Stock market is more tied to the cattle market for signs of longer term demand. And we're looking at this week. OPEC is going to have a report coming out today that should give us an indication. I don't think they're going to cut production at all, and that's why we're seeing this crude oil market have a recovery, plus on the tensions from Iran, and it looks like the conflict's going to escalate. So, the risk is probably to the upside in here. It's going to be hard to be real bearish in that environment to the crude oil market, especially when you have the weekly EIA report coming out Wednesday. And I think 4 out of the last 5 reports have showed a drawdown in oil stocks compared to pre-report guesses. The cattle market had a great rally on Friday. I thought it was, a lot of technical inspired type trade rather than fundamentals. And that's always a concern when you don't have it tied to fundamentals. The cash trade was lower last week. The cutouts really failed to respond to the lower cash or to the lower slaughter pace that we saw. So if the packers start to expand that kill pace once again, it's going to affect their margins. They're already in the red by about $65 a head. So yeah, the seasonalities are turning lower for the cattle. It just may be a tough several weeks ahead for this cattle market until we get into a little bit tighter supplies in later in the fall.
Well, I took 2 markets that are not related, threw them at you, and you took care of it. Great job. Brian Hoops is with Midwest Market Solutions. We'll challenge Brian again in the morning as we try to take 2 markets that are unrelated and see if he can figure out how to tie them together.